Did you know that you can actually become the bank yourself? Yes, you heard right. You can become the bank. Hello, everyone. This is June here from Caliber Wealth Management and Caliber Mortgage. I just wanted to reach out to you guys today and let Canadians know that, these days there are options for you to invest your money. You don't have to go the traditional way if you don't want to. You can become a bank. And what do I mean by becoming the bank is there's a market in the mortgage industry now where you can be the lender yourself. So if you do have access to equity or money that you just want to invest into the market, and you don't want to invest it into the stock market or anything like that, but you're a believer of, let's say, real estate, and this is especially useful for our real estate network, our realtor partners out there that believe in real estate, know the value, long-term value of real estate, and want to use this kind of a model or network to build their wealth. So, right now in the market, you can become a private lender, meaning that you gather your funds and you work with a mortgage brokerage or a MIC, and you invest your money with them. And you can choose kind of what project you want. If you're investing with the MIC, you don't really have a choice. Basically, you're putting the money into the MIC, they generate you a return, and then they take your funds and invest it, but they promise you a rate of return, and they are professionals with a certain strategy for underwriting to mediate risk. They only want to lend to certain criteria to fall within that guideline. If you don't like that kind of generalization structure, you don't have to go that way. You can become like a real private lender where a mortgage agent or mortgage office can connect you to different lending opportunities. Right now in the real estate market, people are borrowing funds to, close their property as an emergency. They need money for emergency to pay off, the government or high interest debt, just refinance, or they found a good deal and they need to buy the property, fix it, reno it, and then refinance it with another bigger lender, a B lender, A lender after. But for now, they need your private money to kind of close the deal. So what can you get access to as a private lender? So as a first mortgage, the general number is you can make around 7 to, I would say, 10% per year interest only payment on your money. Usually it's done as a 1-year term. There are unique situations where you can make it 2 years or whatever you kind of negotiate with the borrower. This is also how you're protected, how your money's protected, is that we make sure that when we lend those monies out, that you as the bank lender, right, you're going to only lend up to a certain equity point. So if the property is worth, let's say, $1 million, as an example, we'll only lend up to 65%, 70%, 75%, depending on how much risk you want to take. There are some lenders that do 80, 90%. Before the rate hike, very popular was many clients were going up to 80%. But as you can see, some areas the real estate value went down. So to kind of mediate the risk, now lenders are doing 70, 75% to be more conservative. It's up to you. You choose what you want. And being a first lender, you have first priority. So if for whatever reason the person doesn't pay you, then you have the right to sell the house, and you power sell the house. And because we make sure that we've done the due diligence, there's enough equity, you're going to collect your interest and any fees that are incurring. You can also be a second mortgage private lender, which means that you go into second position. Once again, client might have a mortgage at 40% loan to value, 400,000 of that 1 million, and so you can lend 200, 250, 300,000 up to the 70% or 75% equity as a second mortgage. Second mortgage rates are more because it's a increased rate risk. You're in second position. So because you have a little bit higher risk, you can charge more interest. So as a lender, as a bank yourself, you can charge anywhere from 10% to, I would say, 13, 14%. This is kind of the market norm. So if you're not interested in investing at the bank, if you know about real estate, you like real estate, you believe in real estate as a foundation, and you want to not let your money sit in the bank and losing to inflation every year 3-4%, and you want to put that money to work for you, definitely you can be your own bank. So just want to get this information out there. This is for all the Canadian clients, real estate agents, real estate partners, especially if you're doing well. You don't want to put all of your money into projects. You want to have some foundation cash flow. We're definitely here to help connect it. And you being the real estate specialist, you know the value of the property, those kind of situations, so you can make an educated, professional decision as well for your money. So if you found this information useful, please leave a like and a follow, and leave a comment. If you have any questions or concerns, give me a call. I'm always here to help, share more information. So until next time, more information to come. Take care and be safe. Bye-bye.